Hey guys, what's up? So just in the last hour and a half, Wall Street got exactly what we thought we were going to get, as Jerome Powell came out and addressed the nation and did indeed lower the federal overnight lending rate by a quarter point. What happened right after that? Mortgage rates shot up. Now, it's important that we kind of talk about this. I've told you guys before, the Fed rate and mortgage rates are not tethered together. They can obviously, as it did today, operate on different sort of spectrums and outcomes. Now, the big news today is that we had already known what was going to happen today. The market had already put that bet on the Vegas table, and they won, right? So that was already priced in prior. Right. So if they would have just lowered a quarter point today, it's not likely that anything would have happened pretty impactful in mortgage rate world. But here's what Fed Chair Powell did do that caused the mortgage-backed securities to deteriorate to the tune of about 22 basis points, which was enough to trigger a midday rate increase. Well, he was talking about the next Fed meeting, which is December, and said that the likelihood of reducing again is not anywhere near in the books at this point. And then he used a different analogy to stress not anywhere near a foregone conclusion. So the market wants it. The market wants further rate drops, and Powell today was posturing in a very dovish way, saying that like they don't know that that's going to happen in December. They're still being very aware of what's going on in the market. Well, the market didn't like that very much, and mortgage-backed securities deteriorated as a result, triggering a midday rate increase. You guys, don't buy the TikTok videos that you're seeing out there. Just because the Fed raises or lowers interest rate has nothing to do with the daily interest rate that mortgages are being offered at.